What's going on, YouTube? Welcome back to another YouTube video. In this video, I'm going to break down the exact strategy that I've been using for the past year on a specific pair that's been able to get me thousands upon thousands in payouts. And I'm going to share that with you guys so you guys can see the same results. But before we get into the video, make sure you guys are following me on Instagram at Arkhamtrades. Thank you. The strategy we're going to be going over is intermarket analysis and CAT theory. If you guys are unaware of both these concepts, that's alright, because by the end of this video, you guys will understand them both in great length and start implementing it into your own trading today. But to start off, intermarket analysis is essentially when you use closely correlated pairs to frame a narrative of the direction of your main pair. And for this strategy in particularly, I want to be focusing on the SP 500 because the SP 500 has correlation to not only the Dow Jones, but also the NASDAQ 100. So if we're anticipating to see the S&P 500 push higher in terms of our overall bias, we want to see the NASDAQ and the Dow Jones in alignment with that S&P 500 and wanting to go higher. You see, the S&P 500 is the index of the top 500 stocks, the NQ is the index of the top 100 tech stocks, and the Dow Jones is the index of the top 30 stocks, meaning the S&P 500 includes both the NASDAQ and the Dow Jones inside of its index. Meaning for anticipating great moves to happen in the S&P 500 and gaining a clear bias, we have to have both the YM and the NQ as the same bias in wanting to go either higher or lower. This is the exact framework of intermarket analysis, using the closely correlated markets to frame an overall analysis of where price is going to go next. Now let's dive into the CAT theory. The CAT theory is essentially using the H4 candle as a power of 3 to anticipate the expansion during your session. So in this example, we have this H4 candlestick during the time between 6 a.m. to 10 a.m. EST. And we can see here that price opens up around this time, see this manipulation to the downside. And as price comes back into that opening price, following that manipulation, we can anticipate a continuation higher in the form of our distribution. The accumulation happens as we open up. The manipulation happens when we get that fake move, which was this fake move to the downside, taking out this area of liquidity. And then we get that distribution after that manipulation takes place, and we find support to push higher. As we find support to push higher, this low then becomes a strong low. And in terms of market structure, price should not want to revisit back below this low. So as long as we can hold above this opening price, price should continue to see higher prices. Plus we can see here that NQ and YM has been pushing higher prices as well. So not only do we get the H4 candlestick in a distribution, but we have closely correlated markets as well moving in alignment towards higher prices. So when we get this pullback inside the marketplace, whether a fair value gap or an order block, I can trust this level of entry to hold as we already have the right measurements pointing us in the higher directions. And as you can see here, price sees this distribution to the upside, gives a slight pullback. Let's say this was a fair value gap or an order block. I can trust this level to hold as we already have the checklist of the intermarket analysis and the CAT theory on our side, indicating to us that market structure is then shifting to now higher prices. Plus we have the correlations together. This then creates a high probability scenario to then anticipate higher prices. And we can take this trade at this level, targeting higher prices for at least a 2-to-1 R. Now let's get into the charts and see this in action. Me and my brother Spectrades have come together and launched SparkTrain University. Coming from humble beginnings, Train has changed our lives and we're able to escape poverty and now live a life of abundance in only 1 year. If we could do it, everyone watching this video can do the same, and it does not have to take long. And that's why we developed a framework that anyone can use inside of SparkTrain University that gives them the same results that we got, if not even better, and we want to hold every student's hand inside of SparkTrain University until they are profitable. Stop going about it alone and let me and my brother be your new mentors. And for this video, I'm opening up 5 slots for the next 5 people to join SparkTrain University. You can just click the first link in the description to join SparkTrain University, and back to the video. Just like so, we're looking at the marketplace here. We have the S&P 500 to our left. At the top here, we have the Dow Jones, and at the bottom, we have the NASDAQ. And some key things I want to take note of is obviously this 8th session. Price on the S&P 500 did not take out that 8th session low. as well as NASDAQ didn't take out that Asia session low either, but we can clearly see here that the Dow Jones did take out that Asia session low. So obviously this is a clear SMT inside the marketplace, where one correlated market did take out a low while the others didn't, which means this is obviously a bullish scenario. As well as we can also see here that A3 we had news, S&P saw a spike to the upside, Dow Jones also saw a spike to the upside, and the Nasdaq saw a spike to the upside. So obviously these markets are in correlation. So we have that SMT divergence as a frame of narrative. Then we have the closely correlated markets pushing in the same direction. And now we have here an entry, which is this fair value gap level, as well as we do have this CAT theory, where as you can see at 6 a.m. we saw this open price. It came lower into this order block level. Price did not take out that low, so obviously it found support at this order block level to then see these higher prices. So obviously as we see this manipulation lower into a level of support, found support, came back into our opening price, seeing this push to the upside. This is obviously a good scenario, anticipating higher prices, reaching back above areas of liquidity. First, maybe back above this high, and maybe back above these 15-minute highs as well. So as the marketplace opens up here at around 9:30, I want to see us reach down into its fair value gap level. Stop loss just back down into 75% of that fair value gap level, targeting back above these highs for at least a 2-to-1 R. And let's see what happens. Price comes down, tags us into that fair value gap. And just like so, we see this push to the upside very, very strongly here, taking out that first area of liquidity, second, and even third area of liquidity up here. So obviously this was an A+ setup. We not only had that CAT theory anticipating that distribution, but we also had these closely correlated markets in alignment with our overall narrative. And obviously when price came back down into this fair value gap, that was a high probability trade, and I could trust that fair value gap to see a massive expansion. We're looking at our next example. We have the SP 500 to our left, and the first thing that will stick out to us is this bearish fair value gap here. So obviously this is a clear area of resistance inside the marketplace, but how do we gain our overall bias? How do we know price is going to find resistance at this level? Well, let's take into account some other things. So we're looking at the NASDAQ here, and we see the NASDAQ at around the same time we saw this push to the downside. Overall, this is a really good measurement of lower prices. Then we saw the Dow Jones also see this push to the downside. Overall, we are getting that correlation, but we can also take note of this high. So as you can see here, the SP 500 came back up, took out this high, just like so. But we can also see here that the Dow Jones didn't take out that same high, as well as the NASDAQ here. It didn't really take out that same high either. So obviously there is a clear SMT inside the marketplace where the SP 500 did take out this high, but we can see here that the Dow Jones as well as the NASDAQ didn't necessarily take out that same high. So obviously this is leaning towards lower prices. So obviously here we have that SMT divergence, plus we have both correlated markets pushing lower. Now let's look at the CAT theory. So obviously we had this opening price. We saw this push to the upside, taking out this area of liquidity, followed by this drop to the downside. Once we see price open up and then take out an area of liquidity, followed by a drop to the downside, this is overall indicating to us that price was at a point reaching higher prices to take out liquidity. Once taken out, we see that we shifted from higher prices to now lower prices. So any retracements inside the marketplace into a level of inefficiency should then be respected, to then anticipating those lower prices. This is essentially our dealing range theory. So obviously we had that dealing range from the high to the low, came back into that area of premium, and now we should anticipate lower prices. So obviously as long as we're inside of this bearish fair value gap, we should anticipate a continuation to the downside. Plus we have that correlated markets anticipating lower prices and that SMT divergence. Stop loss back above this high, targeting lower prices for at least a 2-to-1 R, back below this previous low, and essentially let's see what happens next. Price comes back up, taps us in, and then we see this massive drop to the downside, exactly as we said. We're looking at our next example here. We have the SP 500 to our left, and we can see here that around 6 a.m. we had this opening price, came back now into this last non-close candle, which is our order block level. Price found support at this order block level, seeing this push to the upside, and we can identify this fair value gap as a potential area of support inside the marketplace. Now let's look at our closely correlated markets. So we have the NASDAQ here also pushing higher prices, right? The same exact framework. We had this order block, found support inside this order block level. The Dow Jones is looking a little different, but we do see here that the Dow Jones does have this fair value gap below it. So obviously this is a clear area of support inside the marketplace. Even though it does look different from the S&P and the NASDAQ, it is still seeing higher prices, as before we have been pushing higher and higher prices, as well as we do have this sweep of the previous daily highs as well. So let's see if we can get a break of the high setup, essentially sweeping a previous daily high or a previous daily low and seeing a continuation in that direction. So let's see if we can get a break of the high setup here. So some things to check off is we have the CAT theory anticipating higher prices. Then we have the intermarket analysis also anticipating higher prices. And then last but not least, we have an area of entry, which is this bullish fair value gap targeting back above higher prices. So as the marketplace opens up here at around 9:30, I want to take a long inside this bullish fair value gap. Obviously stop loss below this fair value gap low right here, targeting back above higher prices for at least a 2-to-1 R. Let's see what happens. It comes close to my stop loss, but it doesn't stop me out because this fair value gap low, it should not violate it. And just like that, seeing this push higher, and boom, take profit hit just like so. We can see here on the Dow Jones as well, came lower just a bit, saw higher prices. NASDAQ came lower into its fair value gap level, saw higher prices as well, going into that direction of higher prices, which gives the SP 500 added confidence, making the daily buys a lot easier to dissect. That's going to be it for the video. I hope you guys took notes and learned a lot from this video. If you guys want to support me further, make sure you guys hit that like, subscribe, and comment what you guys want to see next. I'm Arkham. Be safe.